I've been asked a few questions about using technical analysis with any sort of trading strategy. Um, this person that asked this is actually an Infinity Scalper owner, so it makes sense just to cover it using that particular strategy. I'm only going to cover one day, the 18th of August, just to keep this video short. The ideas apply to other days. It doesn't really matter what they were talking about. So if I look at the 18th, let's just mark off where the 18th starts. Starts about here. And this is the trading session that we're coming into. Okay, this hasn't happened yet. The first thing you're going to want to do as you come in, which is around, if you're trading the London session, is just mark off, it's the 3 o'clock is the start time, which is right here. So when we come in, all this has already happened. So the first thing you're going to want to do is just to see where we are in the whole context of things. And the first thing you can see by looking at this chart, let me just move it over a little bit here. Right here. You can see that we've got a resistance level. So just plop a line. I'm matching up some lows. Some highs. There's some highs off to the left as well. So now we know that we've got a level of resistance that could come into play with any sort of long trade. Okay? And just by looking down here, here's our lows. So now we know, okay, well, if we do get a short trade, we got some more room to run. And if we get a long trade, well, we don't have a whole lot of room to run. So do we want to just trade the method? And that's the questions you're going to have to start asking yourself. So let's just take a look at 3 o'clock, 3:05. We get a long setup right here. Well, we're trading right into the resistance level that we had marked off. These are loser trades. Just in general, these are losing trades. They do work out, obviously. Breakouts have to happen or we would never get trends. But use a little bit of sense here. And then we come in and we've got this short trade right here. Okay? Right there. As you can see, it sets up here. But again, just using just the basic, we're forming what we call a double bottom right here. Right? The first low, the second low. So would you short? Would you short coming into this low? Well, the answer is probably no, because there's not a whole lot of room to run. So using what we have here, which is the two lows here, right? Our double bottom is here. We come back and we get a long setup right here. Okay. Well, let's think about this for a second. Would we want to take this trade at 445 to the upside? It runs for about 16 pips. But we are trading, we got one hit, two hits, three hits, double bottom, push to the upside, momentum candles. Is this a trade you'd want to take? Well, that's going to depend on your trade plan. Okay. If we're coming back up to this, we've already had consolidation at the highs of this. Now, this is only a 5-minute chart. Okay. So let's keep that in mind. We're not looking at, a daily chart here where these levels are going to have more significance. But we based. And when you get basing below a resistance level, or you get basing, for example, down here at a support level, you want to keep your eye out for a break. There's two things that can generally happen. Well, there's more than two. But generally what you'll see is you can get a breakthrough and then a pop back up. They call it a failure test. A lot of people call them stop hunting, but they're failure tests. And you can trade those. Or price consolidates and then breaks down. Okay, so before I personally take any sort of breakout trades, I like to see some sort of basing at the extremes, like we do here. So is this a trade you'd want to take? You're going to have to put into your trade plan. But like I said, we got a triple top here, but we're coming back up to a test it again. How many times are you going to test before it's going to break, right? Double bottoms here. You actually we get a triple bottom here, and this eventually breaks. So if people are going, well, how do you want to trade it? You got the 1, 2, 3, back up to the downside. And where's the test again? Test's up here, right? The resistance level. So why not take this trade to the upside, right? It makes sense to take it. And once you get these exhaustion kind of candles coming up, you have to move up, pull back, another test of it. If you're not taking your profits, you get pulled back into this area here, and you basically get a scratch trade. But if you notice the price action that's happening, you can eke out 18 pips on this trade. So you'd be able to pull off a trade in the London session. Now for our US session, what do we get? We start at 8 o'clock. All right. Now we've seen this extreme up here. Different rules of thoughts. Would you expand on here? You can. You can also just go to where most of the price action happens. Some traders do use the extremes, and that is the simpler way of placing these lines. These are horizontal support and resistance lines. Use the word inner in front of that because we are not going at the extremes. You can go to the extremes if you like, but a lot of times before you get tests up here, you're going to get these tests here. Okay, so look to take look inside of price action. Look inside the extremes. Don't just do what most traders do and just oh, there's the extreme, put it there. Okay, you don't want to do that. So we come into our 8 o'clock session, which is right around right here. Okay, so we've already seen this price action here. We've already got our level of resistance up here. We've seen a obvious level here. Get price moving around and through here. Now you got some questions to ask. What are we looking at? Well, we can connect these, right? So what do we have? We have a down sloping trend line, right? We get some basing here at our 8 o'clock start time. We got some basing and a break up into this range that we formed in the other session. So would you take a long trade here for 11 pips? Well, let's take a look at what we're looking at. We're looking at a breakout of a trend line. Okay. We're looking at, where does this happen? We're looking at a breakout or a retest of this particular support level that broke, retest, right? They're absolutely normal. And a trade to the upside. Can you take it? Just by looking at that, you can certainly take it, right? Which would give you, what are we looking at here? Maximum 11 pips. But the question is, again, are you going to take it? We had 1 hit, 2 hits, 3 hits, a breakthrough, a retest. We don't know if this is a retest or it's moving back up, right? We don't know. So that's where you're going to have to decide, okay, well, I do see this consolidation here, just a normal breakout kind of play, right? You can just say, okay, well, it's just breaking out of this to the upside. Totally legit way to play. But remember, we did have a downsloping trend line, okay? So this is going to depend on your trade plan, and if you need a break above and a retest, that's entirely up to you. All right, but we did get a consolidation below support. When this happens, I want you to think of this. When support breaks, what do we expect to see? Well, we like to see a momentum move down like this. We like to see those, right? Which indicates that this is a true break. When you get this kind of price action, it's more an indecision type of break, right? We also have our more major support area in this zone here. And you see price hugs it. So using just basic technical analysis, you have a long trade in the London session, understanding what happens here. You've got a trade you could take here, depending on how much weight you put into these trend lines, right? This draws a trend line down to 2 points, but you need a third point to make it a confirmation, right? So keep that in mind as well. So if you took this trade, you'd take like 11 pips. Okay, so let's go back over. Now we've got this short trade at 10.15, which is right around here. Well, let's say what we're looking at. Again, let's not forget our little range, and we're going to carry that range over to here. So we get price pulling back up into here. Sorry, I tried to shut off these alerts that keep popping up. Anyways, you're not going to take them. It's 3:39 New York time on a Friday. Anyway, so we get this test move up into here, right? Trading back into a range does not invalidate a breakout, just so you know. That's folklore, right? You don't it can test it. Think about it, how that would work. We have our move here. We've got our downsloping trend line, break above. We expect a retest, right? Once it starts breaking below, obviously you can expand your trend line out to this way. But our trade is right here at 10 o'clock, so we're right here. So it's breaking down through here. Depends how you decide to draw your trend lines. There's different ways you can trade them. Draw them. Some traders will need to see a break below this swing low, right? This swing low. Other traders will say, you know what? If price pulls back got this move from here to here, right? This move up. If it pulls back at least 50%, or drops down, sorry, 50%, that's good enough for them, right? Because it's showing some sort of move in that direction. So it depends on how you take your trend line drawing rules. So we could do it this way or the opposite way. But I also want you to understand there's different ways you can also apply. If you look from this high to this low and a pullback, that's about a 50% fib ratio, right? I do actually use fibs. I don't really use the 50 very often. But you can see we got a confluence. We've got our trend line coming down to here, obviously. We've got a pullback of 50%. All right, so we can say that this is probably, any short trade is probably not a bad trade to take. Okay, that's just using different technical analysis. And we're racing through this area right here. And the trade is actually breaking through this whole consolidation area. And the trade drops for about 40 pips. If you get out here, it's a little bit different, 17 pips. If you get out on this, you're looking at 20 pips. And if you watch price action and you saw the move down, right, you got these two different legs of a move. You know, you got this move down and then down to this move here. If you're looking at that, you can say I got to move down. This is the first leg down, consolidation, second leg down, time to move on. And you see this doji candle forming at the lows. You know, it might be something you'd be getting. You can use price action to get out of Infinity Scalper. So this doesn't just mean Infinity Scalper. It means any sort of strategy you're using. These just give you the signals. Whether you take them or not, it's entirely up to you. But you can incorporate basic technical analysis and to make these trades a whole lot better. Okay, you don't want to just trade it blindly. All right. In other videos, I have a 20-period moving average, right? Because you want to trade inside of a trend, right? So it's just a objective measure of trend. And if you look at, well, you wouldn't take this trade at 12:20, right? That's outside of the first 2 to 3 hours you want to trade of each session. Is there any reason not to take this trade? You know, you have to ask yourself that as well. We'll just use that. Let's say this happened earlier. Well, let's take a look at what we're looking at. We've got a downtrend line here, so obviously it's a counter trend trade. We're trading back up into this resistance zone. Sorry, a support zone that could act as resistance, and you can see that it actually does act as resistance. Trading back up into this. So you could say to yourself, okay, well, the entry is on this candlestick right here. I'm trading into this congestion zone. You could trade it, and if it breaks, if you took that trade and you say, okay, well, I will trade into that because we're getting some momentum off here. Got a two-leg move down. We're extended far from a trend line, right? Markets like to mean revert. This could be happening right here, right? This is what happens in markets. You could say, I will take this trade to the upside. Okay? You would take that trade to the upside. But if it rejects off of here and closes back down below here, you're out. Okay, you can also do that as well. So that's just taking it up a notch in trading these. It's not the strategy, okay? It's not so much the system. It's how you're trading it. And when they sell these systems, they try to make them idiot-proof. But unfortunately, you can't. Trading cannot be idiot-proof. It's impossible, right? Mistakes are going to be made. And just taking these trades blindly is a huge mistake. It's massive. And I got other videos where you can combine the 1-minute time frame and the 5-minute time frame for higher probability 1-minute trades. All right, and this is just using basic technical analysis to trade it. That's all this is, right? Normal looking horizontal support and resistance lines. We've got trend lines. You got these inner support and resistance lines, right? Don't ever ignore them. A lot of traders do. You can even get inner trend lines as well, right? Where you wouldn't so much take this extreme. You let the extreme sit and you just take these, right? You can do that as well. And there's also different ways you can trade trend lines. You know, there's different ways you can use those. Anyways, I just wanted to cover this because someone had asked me about it, so I wanted to cover it. The best thing to do is just download Infinity Scalper. Check it out for yourself. You got 60 days to get your money back. It'll stop working. And I don't think it's a bad strategy. I think the users that are using it and complaining about it are not trading it correctly. Right? They just think they can just look at the red and green and trade. And if it was that simple, people would be multimillionaires in trading the Forex market or Forex. And it's just not how it happens. All right, this is for trending markets, obviously. You want to trade these, but you're also scalping, right? You're only looking for 15, 20 pips, and once in a while you're going to get these big moves, right? Depending on how you take your profit, and all that's covered in the PDF. I think it's a great strategy. Not great, it's a good strategy. If you understand basic technical analysis, you can even take it up a notch. All right, so that's it. Click below, go up here above, and just download it, test it over the weekend, test it next week. Right, you got 2 months to check it out. So thanks for watching.